beautiful homes priced what seem to be properly sitting. And I can't help but think that it's just, they're just priced too high.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate.
Hello and welcome back to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. My name is Paul Stevenson. I'm a Level 2 mortgage agent. I'm joined by David Warner, Level 2 mortgage agent, owner at Referral Mortgages, and the Martini Madness guru. David, how's it going? How's the week?
Good. A good start to the week. We had a good weekend out in Carleton Place, having a day of sports on Saturday. Good time. But
great time.
Week started off all right. We've got, like you alluded to, we've got Martini Madness this Thursday in support of Crohn's and colitis research. So for any of you, like I said last week, it's this Thursday, 6 p.m. at Lago in support of Crohn's and colitis research. Tickets are available online, martini-madness.ca. You can buy them there. You can also buy them at the door. We've got live music, DJ, art show, dinner stations, martini sampling. It's a good time. It's a good time for any of you. For any of you that haven't come, ask around. You'll hear good things.
Yeah, and there's always some amazing sponsors at the Martini Madness, and I just want to take a chance, Dave, to thank our sponsors as well. Thank you to all the sponsors globally. Hey, everyone who sponsors anything, congratulations. We thank you. We appreciate you. Yeah, no, it's going to be a good time, Dave. And I know that, like you said, it's for a good cause. Every year, it's always a great time. It's always a packed house. Like every year, it seems to get busier, which I just don't understand how it happens. But it seems to be an event that everyone loves. Everyone talks about the next day for what they remember. You know what I mean?
It'll be busier this year. We've got more tickets sold than we ever have before, so it should be
incredible.
Should be a good time.
Incredible. Last week when we got off the call, we had there was a rate announcement in the US and rate announcement here in Canada. What do you think, Dave? How do we feel about the hold of the rate, and what are we seeing coming in the next 6 months, 12 months? Rates seem to be kind of all over the place now. And I do want to touch on rates because the rate conversations have shifted. But what are your thoughts first on the Bank of Canada's rate announcement last week?
Macklem, obviously, as people probably saw, held the overnight lending rate, which means the bank prime did not change, no increase or decrease, even with some pressure, the oil and energy sector pressure on inflation. But there was kind of a tone that Macklem took in his speech, kind of a warning and about not just maybe keeping things stable, but that that he has done consecutive increases in the past. And I think that's important it wasn't just like a subtle tone, but it was a change in tone. So instead of the confidence that inflation is cooling, but signaling real concern around energy-driven inflation, sticking around longer than expected, being that we all thought, including our neighbors to the south, thought that it would be very quick in the Middle East, but this is dragging on now to 2 months. And I know there was another, talks yesterday around, ending it, another peace deal proposal. But again, this is still dragged on now to 2 months. And that's really hitting the energy sector, which thus far hasn't moved through the other areas of our economy into like food and movement of food and trucking and agriculture, things like that. But the longer it sticks around and that stickier it becomes, and that is going to impact inflation. So that's what he was really kind of stressing on. And he's really worried, and the bank is worried about losing control of inflation expectations if they ease too soon. So instead of moving towards cuts going forward, they're essentially saying like, we're prepared to go the other way if they have to, which was really an interesting kind of change in tone that people found.
Yeah, and here's the thing, Dave, with the conflict overseas is that we're seeing immediate responses in prices. So, for example, if it's a 5-day delay, or now we're talking, like you said, 1 or 2 months, that backlog or the slowing of the strait and of things going through there, whether it be goods, oil, et cetera, we feel the price effects immediately. It's not something that happens, 6, 12 months down the road. We're seeing the same thing with oil. Oil being, I think it was at $103 a barrel. It's gone from $80 a barrel to 118 down to 90 again, back up to 102. Like these are felt immediately. We feel it at the pump because we see the prices go up and down 20 cents a liter, 35 cents a liter within days. but also interest rates. Like we talk about, fixed rates and obviously variable rates when we're talking the Bank of Canada, but fixed rates are impacted by those bonds. And we've seen those bonds spike up almost in line with oil prices. So oil prices go up, bonds go up, fixed rates go up. So we've been kind of seeing that consistently. And I think even the bonds today were at 3.25, whereas they're under 3%, you know, a month and a half ago. So we're seeing the immediate effects of that conflict back home here. And it's increased the cost of everything immediately, right? So the last month and a half has been increased gas, increased food costs, increased mortgage rates. Everything is more expensive because of this conflict. So, a lot of people think, you speak to people, they're like, oh, I don't pay attention. I don't know what's happening. Well, it impacts everyone. It impacts us here in Canada. It impacts us in Ottawa. And it impacts every aspect of our lives because of this ongoing conflict. So the sooner everything is resolved, obviously, I mean, I think everyone is looking for a resolution here. But just to explain the impact that it has on us back here is that it impacts every aspect of our lives, even though it feels like it's thousands of miles away. It's not. Like it's right here at home, and we feel it.
Another area that's being hit immediately is even in Europe, there's flight and routes having to be canceled or delayed because of a shortfall of oil and not having enough fuel or a fuel shortage throughout Europe for the number of flights. So that's going to drive up airline costs and travel costs as we're entering into the summer, which is again going to impact people's budgets and what they have. So all that to say that the bank, Tim Macklem, his speech was just cautious around, instead of talking about cooling inflation, it was a complete switch in tone about worrying about sticky inflation and inflation issues of it increasing and bumping up above 3%. But they're obviously aware that, stripping out energy costs, and I think that's what they're going to be looking at is, okay, well, when we're looking at inflationary numbers and what we do with the overnight lending rate, let's strip out of that the energy costs. And how does that, when we strip out that, what does the core inflation look like without that? And I think that's what they're going to be looking at moving forward, knowing that this is, currently a temporary, hopefully temporary issue that is going to take time for it to resolve. But yeah, I think that was a very interesting kind of commentary on that side of things. But then, right after it, we had the government come out with their spring economic update, which, there wasn't much in it from a housing standpoint. I'll just focus on housing, leaving out everything else. But, their latest housing plan delivered a little bit of progress and promise. And so kind of a couple of key highlights. This is more so in the building standpoint, for developers and things like that. But one interesting area was that they're going to be looking at rewriting the mortgage insurance qualifications to allow for right now from a construction or from an insuring multi-residential properties. It's only been CMHC that's been allowed to do this, which is a Crown corporation. There's two private publicly traded companies, Sagen and Canada Guarantee, which also are mortgage default insurers. They have thus far not been able to insure multi-residential properties. So they're capped out at 4 units up to that they can insure. So they're looking at opening that up to allowing those 2 other private insurers to underwrite up to 8 units of residential properties. So this is a market that CMHC is like absolutely held the monopoly on. So that'll be good from a pricing standpoint, I think, and as well the speed of turnaround. It's kind of an area in the market of 5 to 8 units, which is kind of a really utilized area or for small developers, small communities that have 8 units, 6-8 units that haven't been able to secure financing. It's been hard because it's a lower, I put in quotations, a lower loan amount for these borrowers and for these types of properties that a lot of lenders don't want to lend in that 1 million to 3 million range on multi-residential. And it's only been CMHC that's been in that realm. So this is going to add more options for lenders and I think probably open up that lender pool, which will be great. And again, any new competition is just going to be beneficial in all facets. So they're saying they're going to initiate a 30-day consultation on this and announce further details after this consultation. I think that's good to hear that they're looking at going right into consultation as opposed to like public, where who knows whether this is actually going to make it anywhere. And to give you context, like CMHC, their insurance program, they financed or backed 9 out of 10 rental properties or apartment buildings since in the last few years. So 9 out of 10. It's a pretty big portion of the market. So hopefully that expands, and that expands that lending pool as well. Next being more flexibility for 3 and 4 unit new builds. So looking at expanding mortgage rules to amend to give insurers more flexibility on products for borrowers to build triplexes and fourplexes. So right now there's not anything that will address that. Again, CMHC construction financing is really focused on 5 units and up, and really only in the higher number of units, whereas this is now looking at how can they provide mortgage insurance for 3 and 4 units. What this allows for, again, is better pricing, more access to financing for these. So the smaller units, and those triplexes and fourplexes a lot of times are like those larger units for families. Like you're not in the high, multi-story where they're just like the studio, 1 bedroom, kind of units. You're getting into more of those like 2 and 3 bedroom units, which I think will be, which again will be great. But they're only, again, like I kind of said before, they're only talking about their next steps is public consultation. They're not starting like a 30-day consultation. So, who knows whether this will actually go anywhere. I think the first one seems like it'll have some traction, being that they're starting a 30-day consultation on it. The other one's like, we'll start public consultation at some point.
I was going to say one of the key points that I saw was with regards to the home buyers plan for the RSP withdrawals. So typically you have to start repaying it the year after you withdraw it. I think you have a 2-year window. They've extended that now from 2 years to 5 years. So if you're withdrawing under your home buyers plan, you now have basically 5 years of grace before you have to start repaying it, which I think for first-time buyers, especially those that are pulling it from the RSP, is actually a pretty good increase, like from 2 years to 5 years. Not that 2 years was unfavorable. Like I think that was already a good grace period, but 5 years is much longer. You're basically getting through your whole first term before you have to start repaying back into your RSP, which I think is going to offer some relief, right? Where you don't have to pay that extra, whatever it is, $500, $1,000 a year back to your RSP, depending on how much you took. Could be more, could be 5,000, depending on how much you take out of your RSP. But I think that was a really good initiative that they added as well that I saw.
Yeah. Yeah, no, for sure. I mean, it's kind of funny that they say that grace period to repay it, when technically you don't actually have to recontribute it back to your RSPs. They'll just add that 1/15 to your income every year.
That's income.
But it is, kind of that having that additional grace period where it's not eating into or adding to your income is certainly a good thing.
Right. Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big, protect what matters most. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction at Gertin-Poirier Avocat Lawyers. We love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you for an effortless client experience that opens doors. Call us at 613-744-4488 or visit our website at gertinpoirierlaw.ca. Let's get to the heart of your deal. Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca. Even the best photographer can't hide drywall dust and paint splatter. And every day you delay listing could mean missing peak spring pricing in Ottawa. A to Z Cleaning Expert gets your property truly photo ready. Don't risk going to market half ready. Mention TowRep at atozcleaningexpert.com to receive priority scheduling for your next listing.
This might not make a lot of sense for a lot of people, but for some listening, it might. Every year, there's Canadian mortgage bonds that are issued to fund mortgages within Canada. So they're increasing that issuance of bonds up to 80 billion in 2026 from 60 billion last year. So this is amount of CMB bonds that are available. What this does is it improves the cost effectiveness for funding for purpose-built rentals, for multifamily construction. There's been such an uptick in these programs that the lenders dip into the bond market for cheaper financing. And so this is to help spur that as well.
Mhm.
The government, ironically, is also backstopping 30 billion of it, and purchasing back 30 billion of it. But at the end of the day, what this will help with is the financing and the pricing and costing of borrowing funds on the multifamily construction side of things. So, what that will lead to is in essence, the idea is cheaper construction costs, which then should lead to helping, increasing supply, which we've been seeing in basically all markets of, rental rates come down. We had Sean on from Korea a couple months ago talking about that shift from purpose built, homes or single family homes into the multi-residential or multi-family supply. And that's created a big uptick of supply, which we've then seen like rental rates come down, which is a great thing for the rental market. Not so great on the resale right now, even though we kind of see that supply. But like things like this of increasing that CMB pool will help with that financing, which again will continue to increase that rental supply and drive down those costs, which are good for renters and bringing that overall monthly expense down. The last being is that, you know, the unfortunate thing is that we're still continuing along that trend of massive deficits. So still in that 80 billion range, and really by 2030, not having any any goal at all of getting into a balanced budget, and really looking into, kind of even the next 5 years of being around, still at getting a little bit better, but still being at the 50 billion in deficit range, which, is
Right.
unfortunate, that they're, kind of the plan is to continue that spending spree.
Something to that point, Dave, I want to just ask you about what you're seeing because, we obviously speak to a lot of realtors kind of day in and day out. And what's kind of the overall market sentiment you're hearing now? It's May 5th, May 6th when this comes out. This is kind of typically your peak spring market. So rates are fairly stagnant right now, kind of in a holding pattern. The realtors I'm speaking to, lots of open houses, lots of interest. But what are you hearing as far as like transactions? Are things moving? Are people listing? Like, what are you hearing is happening out in the market?
A number of listings, people interested, but not a lot pulling the trigger. And I think that's seen in the sales figures. I think people are still cautious with the bonds being up. I think they're up 25 basis points in the last couple of weeks. They're in around 3%. They're up to 3.25 right now in the last week and a half or so. I really wouldn't be surprised if we see fixed rates increase again, which is going to be unfortunate. I think a lot of the banks are eating their margin right now because they don't want to move their rates, and they're just eating it in hopes that they can win business, shave those margins down and just to stay in the market. But I think, there's going to be a point at which they're going to have to, if bonds continue to stay around that 3.25 range, which we're at right now. I don't see any world in which they can't. And that's going to slow things on the resale side even more. I know GTA, they did see like a 7% increase in sales, but I mean, they've been at basically zero. So,
Yeah. 7% of nothing is
yeah, it's still nothing. But yeah, I mean, I'm certainly not seeing like an influx of sales transactions. It continues to be refinances, renewals. But how about yourself? Are you seeing an uptick in purchase agreements or in transactional conversations?
no, I have seen an uptick in new builds like last couple of weeks, I guess since they announced the GST, the kind of tax savings. I have seen a few, probably three maybe new build contracts since that happened. Just people, I think they've maybe just shifted their focus like, oh, there's all these advantages for buying a new build. Let's go take a look. So I think that happened for a week. I think people have already forgotten about it. Like I don't think it's something that is front of mind anymore. I mean, it will be as we go, but for it being May 5th, I would say same thing. A lot of renewal conversations, a lot of refinance conversations, and maybe 20% purchases like of my total book of conversations right now. So I think the renewals are to be expected just because we had a lot of people buying in that 2020, 2021 range. But also you'd assume when people are up for renewal like that they would consider potentially at that point listing, moving, et cetera, which is typically what happens. But I think a lot of people are just thinking, we don't know where the economy is going to be in 6 months, a year. let's maybe hold off on the move and let's just stay put for now. So I think everyone also is kind of in that holding pattern, although there was an expectation that there'd be a lot of listings this year. And I think there is. The April stats should be out today or this week. So we'll have those next week. So we'll be able to see exactly what the days on market are, number of listings. I would imagine everything has gone up. Like days on market has to have increased just based on what I'm seeing sitting. Beautiful homes priced what seem to be properly sitting. And I can't help but think that it's just, I mean, they're just priced too high. Like the market has shifted and people are still lagging. It's just, I think as a seller and, having been there myself and a buyer, but just as a seller, you kind of have this expectation that you're going to get equal to or more than what you listed at, and that the market is going to continue going up and that you're never going to be selling in a downswing. It's just like the psychology of a seller. You don't think that the market could actually be lower than what you're listing it at, like you don't want to believe it almost. You're just like unrealistic, right? Like you're maybe thinking of a price from 6 months ago that's just not there anymore. And you have to adapt to the current market conditions. And I've spoken to agents like realtors who say, I've suggested X price to my clients and they don't want to do that. Like they're basically saying like, let's try it at this higher price for 3 weeks and then we'll readjust, or a week or whatever it is.
Yeah.
But they're openly telling me that, their clients are not listening to their advice. So clients, like the people selling the property, the homeowners, are prompting the realtor to list it higher, which is then causing homes to stay on the market longer as well, because the agent coming in that is looking to buy the house with their clients knows that, they have the same comps that the person that advised them to list it lower has. So they're going to know, like, we're not paying 800. We can see comparables at 750, So it's like, you should trust your professional. And that kind of leads me into our conversation where we talked a lot about AI and AI kind of sneaking its way into the real estate industry. And we had someone comment on the YouTube video and said, I don't believe realtors are more honest than AI. In 95% of cases, I would trust AI rather than a realtor. So many bad realtors just there to grab your money. So I just responded. I said, how is AI going to show you around a home and explain the nuances of the property? And I said, just to grab your money. I said, can you elaborate on what you think realtors do and how you see it changing? And I was trying to be fair, like just tell me where your head's at, And the response was, realtors' opinions are often biased. If withholding or shaping information helps close a deal, many will do it. For example, when new build homes were lined up and I had a chance for a quick move in, my realtor told me none were available. It is already gone, which turned out to be false. I contacted the builder directly and confirmed the unit was in fact available. In contract, AI isn't inherently biased in that way and can provide comprehensive information about an area. You're right, the nuances matter, but only a small percentage of realtors share them. Most aim to minimize time spent, complete the transaction, and move on. And for interior-specific details, hiring a home inspector is often more effective and reliable option. And I was using a highly recommended realtor. Later, I realized that those recommendations are usually meant to benefit the realtor, not me. What do you think about that, Dave? There's a lot in there.
So the one comment about a unit not being available, but then contacting the builder and it being available. I mean, I don't know the situation around that. However, if you're basing it off AI and that was AI you're working with, AI, like at least right now, AI isn't contacting that builder and asking them if it's available. They're going based on what the information is available online for it to be able to source. So AI wouldn't have been able to discern whether it was available or not. I would imagine maybe at some point they're picking up the phone and calling a builder to decipher that maybe. But so that part would require that human interaction of, I can't speak to why that wasn't done because that's basically the crux of the comment is around this specific interaction that the individual had and that specific builder. I was just gonna say, I can't speak to that individual, like that instance with that specific one.
Yeah, and I think Josh K was the commenter. I think Josh, to be fair, like to be as fair as possible, clearly your opinion is based on your experience, as Dave said. So like you had that experience, which then creates your own opinion, which is completely fair and understandable. I think there is a lot more nuance than just, like in that case, a lot. Also with builder relationships with realtors are very unique. And I don't know exactly what happened in this case. So we'll just, we're just using this as examples because you mentioned it. But in a lot of cases, if you go directly to the build center without your agent no longer is involved in the transaction. Like the builders, if you check in or say hello or go see a unit, they will no longer, if you go back with your agent, they're not going to deal with your realtor anymore. Like you're basically an independent buyer at that point, which I don't necessarily agree with. I'm not saying it's good or bad, but I'm just saying that that is typically what happens. So in this case, who knows? Maybe your agent talked to someone at the build center who didn't know that the lot was still available. I mean, there's so many things that could have happened here. But generally speaking, I think the argument for realtors, like most people, if you're going to look at a home, yes, there's, we've seen virtual walkthroughs and 3D tours and, drone fly throughs, right? But there's something about like being physically in a home you're going to live in that you just can't replicate. Now, can you go see the house yourself? Sure. But are you going to know that, this frame was built by the original owners in, 1902 oh, you got to know about this plumbing because the septic does this and that. Like, you're not going to know that by walking through it yourself, so there is just things that you're just not going to have the experience of. Someone calls Dave and I and asks us about what happens during a separation. They might have been separated 3 times themselves, but they're not an expert in the mortgage impact of going through a separation. Like, you need someone who's knowledgeable and who's an expert. Now, can an AI agent have a whole bunch of information? Sure, but not about that specific property. They might know that, oh, if there's damage, you need to get this checked, or you have to have this appraisal done, and general information, but specific information about a property, and more so having access to the property with someone who is an expert and getting in the property, feeling it, like how does it feel in the home? What are the bones? Like, everyone can agree. You walk into some homes and you're just like, let's get the hell out of here. Like there's something in the walls. It's like an energy you don't want to be a part of. You can't feel that through a camera. You have to be there. You have to physically be there. And being with a realtor who has seen 100 of these properties, and you got to know that there's a slight rattle in these builds or in these models or whatever. There's all these sorts of things that a good realtor is going to know that AI will just never know for the time being, So that's my opinion. I mean, I think who's to say what's going to happen in 5 years, but I think for now, undeniably, like, agents have huge value, right? Especially when you're going to look at a property or when you're listing your property. There's going to be things you don't know about your own property that they're going to tell you that either increases the value or decreases the value. And to me, that's paramount when you're listing or buying a house, is to have that insight.
It's also the removal of emotion, having that intermediary when negotiating to purchase or to list, like you said, of people not heeding the advice of what, listing their property at a certain price point and the strategy around that. You really only have that one shot. When you lose that period of time, how that can impact things. But the people are inherently emotional, and especially when you're talking about money, and they're even more emotional when that comes into play. And they get even more upset when somebody tries to offer something that they think is out to lunch, and they get super emotional about it. And they want to tell that person to, kick bricks, instead of having that intermediary to explain, like, this is a starting point. Hey, let's look at this. Let's strategize about like what we're going to come back with. Again, being that unemotional intermediary between that buyer and seller, when whichever side that individual's on, that realtor's representing, is a huge benefit on its own.
Yeah, you're right. And I mean, we joke about it all the time as mortgage professionals and realtors that we're also therapists. Like, how many times do we talk to someone who has 12 hours till their conditions are up and they're just panicked, like, understandably, right? It's like, this is a huge financial decision. They need 600,000 by 6 p.m. today, and they've never done this before, and they're buying their first home, and it's everything is new. So for us, where we do this every day, it's kind of like, we know that, okay, it's got to go to the underwriter, it's got to do this. So properly communicating the process and easing people's minds is worth way more than saving X amount of dollars, right? Like, having that peace of mind going through the most stressful transaction of your life, or one of, is very important. And it's important to have people beside you that can explain clearly what's happening, walk you through the process, and make sure it's seamless for you. And, as of right now, that doesn't exist with AI. Will it in the future? Again, I'm not saying it won't, but as of today, still huge value, obviously, in the industry by working with professionals.
Couldn't have said it better myself. On that note, should we slide into some mood boosts?
You know what, Dave? I have 4 boosts for you today. I have 4 of them. That's one more than 3. I can count as well.
Thanks, Coach.
Here we go. Number 1. That comes before 2. Number 1. Did you hear about the guy who froze to death at the drive-in? He went to see Clothes for the Winter. Terrible joke. I don't like that one at all. Number 2. Where do bad rainbows go? Prism. It's just a light sentence. Prism. Number 3, I like waiters. They bring a lot to the table. And last but not least, the bonus boost. April showers bring May flowers, Dave. But here's the thing. You can't plant flowers if you haven't botany. If you haven't botany. Thank you, everyone.
Terrible bookend.
Thank you, everyone, for dealing with us, listening. Every Wednesday at 10 a.m., we got new episodes. You can follow us on our socials. Got some exclusive shorts and content on there. Thank you, David, for being here. Thank you to our sponsors. Have a great week, everyone. What a wild
Martini
ending.
Madness. Martini Madness.